It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Hey, welcome back to the Real Estate Breakfast Weekend Property Show. Yes, where we unpack the Australian property market and the global forces continuing to shape it. Another busy Saturday morning with market moves, investor trends and the bigger economic picture all on the table. It is a Saturday, May the 16th. Good luck if you're out hunting around for a property today. If you're blowing out the candles, Janet Jackson, she's having a birthday today. She's turning 60. And the Bond actor Pierce Brosnan, he's turning 73. I see it was on this day that the first Academy Awards, they were held in Hollywood in 1929. Also, how many of you saw the Top Gun movie when it was first released in US cinemas? That happened on this day back in 1986, which means, boy, that is 40 years ago. And I remember going and seeing that in the cinema with my girlfriend at the time, and she fell in love with Tom Cruise on the spot. And it was also on this day that Kath and Kim premiered in Australia back in 2002. Real estate news for our weekend. The Trump Tower, which was proposed as this new development on the Gold Coast in Queensland, it has been canned. The reason? The developer of the project said the name Trump has become toxic. What a shocker. So the 91-storey Trump International Hotel and Tower is over before it begins. Probably, though, never a great idea to start with. Let's take you to Melbourne right now, where we are catching up on our Saturday morning with Lucy Meer. She is a mortgage broker for Loan Market. And a very good morning to you, Lucy. Welcome to the Real Estate Breakfast this morning. Tom Cruise, original Top Gun. I was asking you off air if you saw that, but no, you were probably a little bit too young.
I was not actually born in 86 when it came out, but I have definitely seen it quite a number of times since.
Yeah, did you see part 2 of Top Gun?
No, I haven't seen Maverick yet. It's actually on the list, but we have a young toddler, so going in the movies is not that easy at the moment.
Yeah, fair enough. Well, I can give you something to watch over the weekend, which I watched this week on Netflix, and that is The Chestnut Man. Man, this is a fantastic series. So there you go. There's something that you can watch after the toddler is asleep.
Yeah, put it on the to-watch list.
Yeah. All right. Well, we're talking mortgages, obviously, and I note that you were getting frustrated because you worked in the banking sector and you felt like no was often the only answer clients received. You then decided to move into broking because you believed that there was usually another pathway for people. You know, flexibility and problem solving. Just how important is that for borrowers right now and what you're seeing?
Yeah, for sure. I was in banking previously. I was in business banking specifically, and I just felt like I was saying no a lot more often than I needed to. I started out my finance career as a customer service manager in broking, so I sort of knew that there was more to it than just what one bank could offer. I think it's always important, right? But I do think that it's more important than ever now, particularly with the changes that are coming if they get through from the federal budget. Having options, not going to your big four might actually be the thing that gets you over the line. And so having these options and having a broker who can look at things that are a bit outside the box might actually get people over the line a bit more.
Yeah, you work with first-time home buyers and families looking to upsize. It's tighter than ever, right, to get the right results. And we often, many times, say, don't give up, keep going, because so many people do. And you would have dealt with people when things get that real testy, difficult time, so much so that a client might just say, look, I can't take it anymore, and they give up on their property dream.
Yeah, for sure. I think as particularly first home buyers maybe don't realise how long it can take sometimes. And, people get turned down not just because of missing out at auction or missing out when they put an offer in, but, a building and pest inspection comes back no good, or the contract review is no good. It's disheartening, right? Because you've then missed out on 3 properties that you've bid on. Then there's been 2 that were no good, building wise. I had one client in particular, they actually missed out on 6 properties, first home buyers, before they found the one. And this one actually, and it's always the way, I find it so often, when clients have missed out on properties that they think is their dream, the next one they find is always even better and they get it. And it's a lot easier than it should have, than the last one that they were fighting for. And it was so emotionally charged in the last one, and then something happens and it's easy. It's meant to be. So absolutely agree with your saying of just keep trying.
It's a little bit like business as well. People can be in business and they're about to give up on their business. They've been pitching all sorts of different things for different clients. They're about to fold, and then that one client comes through and can save the business. And that sort of leads me into asking you this. How many times have you been in the position where a person is thinking that they're not financially sound, only to perhaps after talking to you realise that their financial position ain't as bad as what they thought?
You would be surprised. I find this more often than not. The amount of people that log onto the Zoom with me and they apologise. They apologise to me for their financial situation, and they're a little bit ashamed, which I hate to see. They're like, oh, I don't understand finances, or I've been told I'm not good at it, or I'm not as far ahead as I'd like to be. And then you get to the end of the meeting and you're like, oh, so let's do a pre-approval because you can buy tomorrow. And I take a lot of pride in being the cheerleader, because obviously no one's told them otherwise. No one's told them that they can do this. There is a lot of shock, I find, when people come into the meeting and they're a little bit conservative and a little bit, they've got a little bit of shame around their financial position or their lack of understanding a world that they shouldn't really understand because they've never been taught before. And then by the end of the meeting, I'm kind of like, hey, let's go buy a house. I love the turnaround though, but it's more often than not that I actually get clients who are underselling themselves rather than overselling.
Yeah, that is very much the whoop whoop. How fantastic is that? Yeah, let's get out there and buy a property. You thought you couldn't buy for another 6 months? Hey, I've got news for you. And accountability. This is pretty big for 2026. It's a word that consumers in the mortgage space are always being dumped on them. People are constantly being mortgage stress tested by the banks, but people have got to realise they can also make banks accountable too, like renewing loans every 6 months to keep banks on their toes, honest with their rates, putting them to the fire, perhaps, Lucy, because it's a two-way street.
100%. The loyalty tax is what we call it. I find that people and it probably comes from them thinking that they're not in the best financial position to begin with. So when they do get a loan, they're inherently grateful for it. But I think the thing that you've got to realise is that sticking with a bank that you've been with your whole life, and there are so many people that I come across that are still with the same bank that they opened a bank account with in primary school, they're not giving you the best rate. They're not looking after you, and you actually have the opportunity to challenge them on that. Retention teams are actually really good, but unfortunately you do have to play the game. My clients, we reprice every 6 to 12 months. We might not refinance in that time, but we absolutely challenge the existing bank to give retention pricing, because that's actually where you get the best rate.
Yeah, so don't be passive. Yes, be almost passive-aggressive when it comes to putting banks on notice. We are talking to Lucy on the Weekend Property Show. Coming up next, we're going to look at, is lending slowing down?
From the emotion of property, the economic inflation, managing your expectations, lack of stock, price growth, construction appetite, days on the market. Stay informed with us and know your property. You're listening to the Saturday Property Market Update.
It is a real estate Saturday. Lucy is in Melbourne. She's giving us the lowdown as part of our property show this morning. The ABS lending data, let's look at that because it's showing the slowdown in new housing loans after a very strong 2025. The total value of new lending dropped about 4% in the March quarter, with both owner-occupiers and investors pulling back, is one of the clearest signs yet that the higher rates are finally cooling borrowing appetite. Is that something you're finding?
Yeah, I think across the board, I work for a bigger business with sort of 14 other brokers that subcontract in there. Across the board, we're all seeing that our numbers are not down, but they're not up. And we're finding it is definitely slower. I'm finding that my pre-approvals I'm needing to roll them more often than not. Property's a bit stagnant as well. So I think, I am seeing that sort of start to flow through now.
And borrowers, they're becoming much more repayment focused rather than purely chasing maximum borrowing capacity. Are you seeing the conversation shifting from how much can I borrow to perhaps how comfortable will I feel if rates stay higher for longer?
Yeah, that's such an interesting question, particularly having gone through that period where we were getting 2% interest rates, during COVID and that, which was quite a lovely time for everyone. However, I was getting everyone, particularly first home buyers, they're so gung-ho and really willing to just how much can I borrow and can I throw everything at it? What's my max purchase price? And my conversation has always been around, look, I don't want you to focus on what you can buy for. I want you to focus on what you can repay month to month. What does your budget actually allow doing? That conversation back then, way harder to have than it is today. I am finding it is a lot easier to have that conversation and go, look, you can borrow X amount. However, when you look at that and break that down, this means Y amount per month. And that's actually not something that you're telling me you can afford. And they are actually taking that on board a lot more than what I was seeing previously. I think people are just a little bit more cautious and more aware that rates can move, because prior to this, right, prior to COVID, our rates had, hadn't been up in that that higher margin. I mean, it was when I started in banking, they were up high, and then they sort of were nice and average for a period of time. But people getting in around that COVID time, they had only seen less than 5%. So I think now that they've come back up, people are like, oh, they actually do move back up, and we do need to cater for that, which is a relief for me, because I don't want to see people in mortgage stress either.
Well, it certainly sounds like you've got your hands very, very busy there in Melbourne in the mortgage space. It is such a different sort of a year. 2026, vastly different to 2025. Thanks so much, Lucy, for coming on to the Saturday Morning Property Show. Really appreciate that, and talk again in the future.
Thank you so much. I love being on.
Explore new property destinations where you could live with exclusive interviews covering real estate news and market insights.
The pace of growth is beginning to moderate. This is for Brisbane. Is that the case that you're finding where you are?
Yeah, look, there definitely has been a bit of a shift in the market. But what we are starting to see is that the pace of it has just started to slow down a bit. The pricing itself is just sort of, I think, coming in a bit more in line with the rest of the market, where we're not seeing this crazy urgency to purchase.
One of the things about the Brisbane market is that whole tightly held aspect, a lack of stock, which is still pumping the market.
Yeah, 100%. And that doesn't change anything on sort of what's happening in those suburbs and what the value of those suburbs are. It is a constant conversation that we're constantly having with clients and sort of talking through those things.
A lot of the major banks now have reset their forecasts to 2 or even 3 rate rises over the course of this calendar year.
We connect you to the best real estate information across Australia. The Real Estate Podcast.